Hello, this is Professor Barati. I'd like to go over a 10Q report, which is a quarterly report for a publicly held company named Raven Industries. And the 10Q report, the SEC requires publicly held and publicly traded companies to file 10Q reports quarterly. And it basically preludes to the annual report. Auditors are very much involved in auditing this 10Q as it helps them prepare for the annual audit, for the annual report as well. The 10Q report basically ends up in the annual report as well. It's just that the annual report gives you a lot more color commentary about the history of the company, a lot of charts, a lot of pictures of the company's industry and its employees. So it's a much more fun read than the 10Q. The 10Q is basically a financial commentary and analysis of the quarterly earnings. The reason why I want to show you the 10Q is we don't have to comb through hundreds of pages that come with an annual report to get to the point of the annual audit. Also, the 10Q is a quicker read, and anyone can access these 10Q reports on any company's website under Investor Relations. The 10Q, you will find the 10Q report is essentially the same for every company. It's the same outline. So whether this is Raven Industries or Apple or Google, you will see that the same outline is used for all these companies. It's obviously the content is different. So in a 10Q annual report, it starts out with Part 1, financial information. So we get our financial statements, consolidated balance sheet, statement of income and comprehensive income, shareholder equity, statement of cash flow, and notes to consolidated financial statements. Then management has a discussion and analysis of these statements, quantitative and qualitative disclosures, and then they talk about internal controls and procedures, which obviously is an important function of our auditing class. Part 2, we get into legal proceedings, risk factors, defaults upon senior securities, other information, and signatures. So starting with Part 1 in a 10Q, every company will have a comparison consolidated balance sheet, comparing the quarter for April 30th, comparing it to January 31st and April 30th of last year. There is flexibility on what a company will present, but we have our balance sheet or statement of financial position. Then we are followed with a statement of income and comprehensive income. So basically our income statement compared to the 12 months last year. Again, very condensed level. We have a net income. We have a net income per common share and net income from diluted share. Many of you at this point, at this level, will remember from your intermediate accounting the difference between basic and diluted common shares for shareholders. Then we get our cash dividends. Our comprehensive income starts with our net income. We add back foreign currency. Post-retirement benefits from net income and tax benefit expense get subtracted. We get comprehensive income. Consolidated statement of shareholders' equity. So it starts with our beginning balance, our different accounts that are in the shareholder equity account, paid-in capital, treasury stock, the shares that we purchased back through treasury stock, the cost of those shares, our retained earnings, our accumulated other comprehensive income, and so on. The statement of cash flows then follows the equity section. It shows us how the company generated cash and what it did with that cash. In this case, net cash provided by operating activities was $7.7 billion. And starting with net income and the adjustments to net income. Investing activities, we purchased capital equipment. Financing activities, they paid out dividends, it made up most of that. Restricted stock, vested, payments and acquisitions related to contingent liability, which they'll explain later on, and so on. Now comes the part that really the auditors help contribute. The basis of presentation of principles of consolidation. The important thing is the summary of significant accounting policies. So they mention the FASB update on intangibles, goodwill, and other topics. They have now simplified the test for goodwill impairment. So they discuss that. They talk about the compensation, stock compensation, improvements to employee share-based payment accounting. So they update the accounting pronouncements for that. Company is prospectively recognizing excess tax benefits or deficits on vesting of settlement of awards when they occur. So they talk about that accounting principle. Inventory. They talk about their inventory principles involved. They talk about some of the new accounting standards that have not yet been adopted. And so as you can see, there's a lot of disclosure in this 10Q. A lot more than just numbers and financial statements. Selected balance sheet information, which will be followed up by their acquisitions and investments. They talk about their acquisitions and the investments they're making. Goodwill and long-lived assets. Management assesses goodwill for impairment annually, which auditors are required to do during the fourth quarter and between annual tests. Whenever triggering an event indicates there may be an impairment. Impairment tests of goodwill are done at the reporting unit level. During the fiscal year of 2017, management implemented managerial and financial operations and reported changes within Vista and Aristar to further integrate Vista and the Aristar divisions. They go on to talk about their long-lived assets and other intangibles. Employee retirement benefits. Again, you will see this consistency in every 10Q. So it's really standardized. Contingencies. Another part of the audit learning objective for us this year was learning about how to report contingencies. Talking about lawsuits, claims, regulatory inquiries, disputes. So a company has to disclose that and talk about it. Income tax is another area they have to talk about. They talk about their dividend, share-based comp. Segment reporting is very important. This company has three basic business segments, and they talk about basically their financial statements for each segment. Then management starts to talk about its company. Executive summary, results of operations by segment, the outlook, liquidity, off-balance sheet items, critical accounting policies and estimates, and accounting pronouncements. So essentially, they start with their talking about their company. The results by their segments, their three business segments. Talk about their outlook. And then they talk about liquidity and capital resources. Net working capital. Critical accounting estimates. Very important in the auditing process because this is where errors can be made, and this is where consistency is very important in that we maintain the same methods that we do these estimates. So that is an important part of the 10Q. They talk about how they estimate the long-lived and intangible assets and goodwill. The company assesses the recoverability of long-lived assets, including definite lived intangibles, equity investments, property, plant, and equipment, using fair value measurement techniques. If events or changes in circumstances indicate that an asset might be impaired. So they go on to talk about how they estimate long-lived and intangible assets. Goodwill, obviously, is a big part of their business because they're doing acquisitions. So they discuss that. And then comes forward-looking statements. Quantitative disclosures about market risk. They talk about risk in their market. Primarily, looks like it's foreign exchange risks. And then the important control and procedures, the internal controls, which is heavily audited. And basically, the reason why I used this is because 99% of the time you'll see no problem with internal controls. But this particular company had problems. So it has been disclosed in this 10Q. So our management, under supervision of the CEO and CFO, evaluate effectiveness of the design and operation of our disclosure controls and procedures. Disclosure controls and procedures under the Securities Exchange Act are our controls and other procedures that are designed to ensure that information required to be disclosed by us in the reports we file or submit under the Exchange Act is recorded, summarized, reported within the time period specified. Based on their evaluations, concluded our disclosure controls and procedures were not effective as of April 30th due to material weakness in internal control over financial reporting. Notwithstanding the existence of material weakness described below, management has concluded that the unaudited consolidated financial statements included in this quarterly report present fairly in all material respects our consolidated financial position. Then they talk about these material weaknesses. The company has identified the following control deficiencies, which constitute material weaknesses. So they talk about that in this section. Basically, it's in their goodwill, long-lived assets, and finite lived intangible assets were not effectively designed and maintained. Very important. The company controls related to accounting for inventories were not effectively designed and maintained. And then, of course, they have to talk about what they're doing to resolve that problem. And so they have a list here of bullets of what the company is doing to solve that. And, of course, it's going to be beefing up the internal audit process as well. So it's a major part of this 10Q is their internal control that had material weaknesses. They talk about legal proceedings. Companies involved in party in lawsuits, claims, regulatory inquiries, disputes. Okay, that's where contingencies come in, and the auditors have to review that to see if it's material, and it needs to be accrued in the income statement and the balance sheet. And then, of course, the end is the signatures. So that's an idea of the Ravens 10Q, the latest 10Q. And again, any company you pull up will have a similar outline, obviously different content. Thank you for watching.